Have you ever heard the old adage, how January goes, the whole year goes? Well, if you haven't heard it, you just did hear it. It's an old Wall Street saying, and we're going to talk about it right now. It's known as the January effect. But before I get to that, hey friends, Adam Hammer here, Chief Investment Officer at Hammer Financial Group in very cold Buffalo, New York, and snowy Myrtle Beach, South Carolina. That's right. Even in South Carolina, there's been snow on the ground. So it seems no matter where you are in the country, we're all dealing with a very big burst of wintry weather. So hopefully you're staying warm as you watch this video. All right, the January effect. What does it mean? Why should you pay attention to it? Well, the general idea is actually very simple. It is how the stock market performs in January often can uh, lead to how does the market perform overall during the year. So if we have a strong stock market in January with positive gains, that often leads to a positive year overall. And likewise, if we have a weak January, that can often mean that we have a weak year overall. Now, of course, it's not a guarantee, right? It doesn't mean it always plays out that way every single time. But there's enough historical data to say, yes, there is a trend here that how the market performs in January often will tell us how the end of the year overall will end up. So that raises the question of, okay, well, how did we do in January of 2026? So let me share my screen with you right now, and we will discuss that. So what you see here up on your screen, this is the S&P 500, the big broad U.S. stock market. And this is the start of the year in 2026. And you can follow the line from left to right. I did the numbers for you. How we did in January was the market was up about half of a 1%, 0.5%. Uh, that's considered okay. It's not great. It's not terrible. It's mixed. And so, based on the January effect, we would probably say that since we had such a mixed January, kind of a flat January, we would anticipate potentially having a very mixed year overall in the market. And one thing that has happened as I've been recording this video now in the early part of February, the last couple of days, we've seen a sell-off in the market. The AI trade, the big tech companies, the Magnificent Seven that you probably hear about on the news, have seen a lot of selling pressure. And as a result, the overall market has declined with those companies in that tech sector going down. So as always, it's something that Paul and I will keep an eye on as investors. We'll keep watching for it. But in short, yes, the January effect does seem to have some validity, and based on how we've done in January, which was a very flat, mixed performance, 2026 might be a year in which we see a lot of choppiness and a lot of mixed returns in certain sectors, perhaps doing better than others, and we may not see the big growth in the indexes like we have the last couple of years. But all we can do is evaluate every trading session and go from there. But with that said, hopefully you found this video of interest. If Paul and I can ever provide any more information to you, easiest way to get a hold of us, if you go to the website, paulhammerfinancial.com, and then there's this pink button that says Contact Us. If you click Contact Us, there's this form here. Hit Submit, and we will be in touch with you very soon. So thank you again for watching this video. Stay warm, and I will see you next time. Take care. Bye-bye.